Michael Hainsworth in for Mark Bunting. Welcome to Market Call. For the next hour, David Burrows is here. He is the President and Chief Investment Strategist at Barometer Capital Management. We're getting ready to take your calls, emails, and tweets on North American large caps. You can call us toll-free, 1-855-326-6266. You can send an email to marketcall@bnn.ca or follow us on Twitter. And of course, you can now upload a video question. Film a quick question on your device using the social media platform of your choosing. Tag us in the post, send us the clip. Be sure to put video questions in the subject line, and it'll be answered during the course of the program. David, welcome back.
Thank you for having me.
Triple-digit sell-off in Toronto. Got better than expected news out of the U.S. on the pink slip report. Is that telling us that the jobs data is going to be stronger and therefore the cheap money ride comes to an end sooner rather than later?
I think clearly some of the negative revisions that you saw in the first quarter, early part of the second quarter, are starting to go back the other way. You know, there was some question, was it weather, was it something else? It does look like weather had an impact. It does look like the port situation in the U.S. had an impact. The economic data is starting to come in a little better than expected now. And obviously, when you look at the bond market, you know, there are some real views that the situation is shifting, and that has an impact on some big sectors.
But at the same time, while we have the International Monetary Fund saying the Americans shouldn't raise their interest rates until 2016, there's still a lot of expectations that this will be around September, maybe December. So we know the cheap money ride's coming to an end eventually.
Look, the reality is, well, everybody grinds over whether the Fed is going to raise short-term rates. The market is telling you rates are going up. Right? If you look at the bond market, which is the free-floating market, it is telling you that rates are rising. Technically, that bond market has really gone through a shift. So realistically, whether it's the fall of 2015, whether it's early 2016, is more of a moot point. What I think you're getting from the international community is one of the concerns about a strong dollar or rising rates is the impact on emerging markets who have less ability to deal with it. And so I think that is one of the concerns about what's going on.
But having said that, does this sell-off today constitute a buying opportunity for you?
Absolutely. We have been for quite some time very bullish on developed economy equity markets. And I think that there's a very strong case to be made where things look very, very good going forwards. And this is going to cause more money to rotate from the fixed income world, which is arguably incredibly expensive, to the equity world where balance sheets are very strong, earnings are slowly improving, and the situation really is almost sort of a Goldilocks environment.
What's the standout sector for you?
There's very clear have sectors, and the obvious one right now is financials. Consumer discretionary looks very good, technology looks very good, healthcare looks very good. Those are the haves. There's some very clear have-nots, and sadly, Canada has a bunch of them.
Okay, so outside of energy, what is the other big have-not sector?
As of, I believe, 2 years ago, when China started to slow, commodities as an asset class entered what I'll call a secular bear market. So valuations for commodity-related companies in general are likely to continue to be under pressure as we go forward, certainly relative to other groups. And then, of course, what we're seeing in the bond market is quite negative for what I'll call bond proxies, and that would include utilities, REITs, energy infrastructure, which was a favorite group of ours for many years, probably telcos. So this is a world where correlations have been falling, and if you are an active stock picker, targeter of specific groups, it's a market where there's really very good opportunity.
Well, let's take a break and come back and take some calls.
Thank you.
We got David Burrows here. He's the President and Chief Investment Strategist at Barometer Capital Management. We're taking your questions on North American large caps. The phone lines are open now at 1-855-326-6266.